Here's something that will change how you think about your money forever. While most investors were watching the stock market in 2025, something much bigger was quietly happening. The US dollar had its worst year since 1973. It lost nearly 11% of its value in a single year, and central banks around the world responded by buying over 600 tons of gold for the 17th year in a row. They are not doing that by accident. In this video, I'm going to explain what is really happening to the dollar, what the smartest money in the world is doing about it, and why SCHD investors are already positioned better than most people realize. Stay with me, this one matters. Hey, and welcome back. This is SCHD, where we break down big financial ideas into simple, actionable steps. Nothing in this video is financial advice. Always speak with a licensed professional before making any investment decisions. Now let's get into it. The US dollar has been the world's #1 currency since 1971. Every country used it, and every barrel of oil was priced in it. Nations held billions of dollars in reserve because it felt like the safest thing to own. That foundation is cracking. The dollar index dropped 9.4% in 2025, the biggest annual fall in over 50 years. The dollar fell 13.5% against the euro and 13.9% against the Swiss franc. Morgan Stanley projects it could fall another 10% through 2026. Three things are driving this. First, America's debt. The national debt has crossed $37 trillion. In May 2025, Moody's stripped the U.S. of its top credit rating, becoming the last of the three major agencies to do so. All three have now downgraded America. That tells the world that lending money to the U.S. carries more risk than it used to. Second, countries are pulling back from U.S. Treasury bonds. Foreign investors once held nearly 50% of all U.S. Treasuries. That figure has fallen to 30%. In January 2026 alone, $18 billion flowed out of the U.S. Treasury market in a single month. Third, new payment systems are being built to bypass the dollar entirely. BRICS nations are moving to settle 50% of their internal trade to local currencies. ASEAN is building their own regional payment system by 2027. Brazil and China now settle 40% of their bilateral trade without touching the dollar. This is not a future risk, it is already happening. Now, here is where the story gets interesting. When the dollar weakens, one asset tells the truth louder than anything else. Gold. In 2025, gold crossed $4,000 per ounce for the first time in history. It gained more than 60% for the year, its best performance since the 1970s. JP Morgan now targets $5,000 per ounce by the end of 2026. Goldman Sachs agrees. But the price is not the most important part. Who is buying is. Central banks have purchased gold every single year for 17 consecutive years. In 2025, they bought over 600 tons. The National Bank of Poland alone added 67 tons, becoming the largest buyer in Europe. Central banks do not buy gold for profit. They buy it because they want reserves that no other government can freeze, seize, or devalue. After the U.S. froze $300 billion in Russian reserves overnight in 2022, every nation on Earth quietly took note. The dollar's share of global foreign exchange reserves has dropped from 71% in the year 2000 to 58.4% today. That is the steepest decline in 50 years. When the world's most powerful financial institutions are voting with their balance sheets, that is worth paying attention to. Now let me connect this to your everyday life. Everything appears to be getting more expensive, but in many cases, prices are not actually going up. The measuring stick, the dollar, is getting shorter. Your salary buys less, your savings lose ground quietly every year. Most people feel like they're working harder and falling further behind. They're right. That is exactly what is happening. The people who protect themselves are not the ones holding more cash. They are the ones who own assets that generate income, which grows faster than the dollar shrinks. That is the whole strategy, and SCHD is built exactly for it. Here is something remarkable that most financial news has not fully covered. At the time of recording, SCHD is up 8.6% in 2026. The S&P 500 over the same period is up just 1.5%. While tech stocks are actually falling, dividend stocks are leading the market. That gap tells you everything. This is not luck, it is structure. SCHD, the Schwab US Dividend Equity ETF, holds 100 of America's strongest dividend-paying companies. Not just companies that pay dividends, companies with a long proven track record of growing their dividends year after year. That distinction matters enormously. The fund's 10-year dividend growth rate is 10.72% per year. The annual payout grew from 27 cents per share in 2012 to $1.05 in 2025, nearly 4 times in 13 years. It manages over $83 billion in assets with an expense ratio of just 0.06%. That means on a $10,000 investment, you pay just $6 in fees per year. That dividend growth never stopped, not even during the worst moments in recent history. In 2020, when the pandemic hit and companies worldwide cut dividends, SCHD's dividend grew 17.64%. In 2022, when markets fell sharply, it still grew 13.90%. The income never retreated. It kept climbing. Here's why that matters. If inflation runs at 3% or 4% per year and your income grows at 10% per year, you are building real wealth every single year. Investors who bought SCHD in 2020 at a split-adjusted price of $17.50 now earn a yield of nearly 6% on their original investment, not because they timed anything perfectly, simply because the dividend kept growing and their yield on cost kept rising with it. So what do you actually do? 3 simple steps. Step 1, start buying SCHD consistently. It does not matter if you begin with $100 or $10,000. What matters is that you start and stay consistent. Turn on automatic dividend reinvestment so every payment buys more shares, which pay more dividends, which buy even more shares. That snowball grows every quarter. Step 2, be patient. The power of SCHD is not what it does in any single month. It is what it does over 10, 15, 20 years of dividends growing quietly in the background. Time is the engine. Step 3, use a tax-advantaged account wherever possible. Holding SCHD inside a Roth IRA or 401k means your growing dividend income compounds tax-free. That is the most efficient version of this strategy. The dollar had its worst year in half a century. Central banks are buying gold at historic levels. Foreign demand for US debt is falling. These are long-term structural shifts, not short-term headlines. SCHD is not a perfect solution to every financial challenge, but it is a proven low-cost way to build income that grows in good years and bad, while a currency slowly loses its grip. If this video helped you, please hit the like button and subscribe. Drop a comment telling me how long you have held SCHD or whether you are just getting started. I read every single one. See you in the next one. Smart investing, profitable results. This content is for educational purposes only. Nothing here is financial advice. Past performance is not a guarantee of future results. All investments carry risk. Please consult a licensed financial professional before making any investment decisions.